Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously. Create dozens of quick lists. Display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Friday, July 3rd, 2015. This show is going to be dedicated to your questions solely because the market situation remains a situation where it's really calm. I'm going to start the show to tell you the situation about Greece. Just before I mention that, the question bar is open. If ever there's any questions you have, feel free to ask them. Now with the situation in Greece, those are the scenarios that lay out, that we need to lay out ahead. First of all, the fact that the Greek referendum will happen on Sunday. If the no vote wins, what could happen? First of all, if the no vote wins, which means that the Greek will vote to not stay in the Eurozone, well, we could expect, of course, a lot of fears in the market. And there are 2 things that might actually go up. First of all, we might see a rush on gold, a wave of buyers that's coming in on gold. And we might see a slight correction also as well on the markets, NASDAQ, Dow Jones, and also a slight rally among US dollar. That's if the no vote wins, I mean. Now, if ever we do have this, an increase of the US dollar, a decline in the markets, gold can make a slight rally. But will this rally continue as much? If the markets have a correction, are there going to be opportunities to buy at a lower price? Yes, there's going to be. But I think if ever the no vote wins, what's going to happen is definitely a situation where at a certain point, investors are going to say, look, American companies are not that exposed to Greece. The situation in Greece has been happening for a lot of times. And so far, it seems like American companies are not that exposed. It's mostly European banks who are mostly exposed and who hold on to Greek debt. So if ever the yes vote wins, so the Greek vote to stay within the Eurozone, what we could expect is either a volatility in the markets. So because if ever they accept us in the Eurozone, now what's going to happen? We're going to have a new finance minister. We're going to have, we don't know if Greece is going to respect its part of the bargain. What conditions are they going to willing to accept if they continue to negotiate? So those are all some factors that will weigh in. And I think if ever you want to bet on the results of the referendum ahead of its happen, I think the best alternative that you have is with a volatility ETF, such as HVU. So HVU, if you do have some exposure on HVU or on NVXX, the VIX, I think those are the greatest alternative that you have. Why? Because the gold situation, though, I think it's not only determined by the fear factor with Greece, it's also determined by what the Fed is going to do in the next meeting. Because gold right now, we have seen it declining, even if the situation, the negotiations with Greece have worsened. And the reason why is because I think investors in gold are actually saying to themselves, look, we believe that the Fed is going to raise interest rate. We have low inflation. And if the Fed raise interest rate with this low inflation environment, it's going to be negative for gold. And this is, I think, why we have seen a wave of sellers that has been more consistent, even if there have been some fears on the market concerning Greece. So this is why I think that definitely you better position if you want to trade that referendum ahead of this referendum, or bet on the results of that referendum with an ETF such as HVU or VIX. Now, Z asking me questions, do you consider HVU as a pure gambling or should it be avoided? Well, it's a gamble. Yes, of course, it's a gamble. Now, should it be avoided? Well, it depends on your risk tolerance, Z. If you have a higher risk tolerance, well, you're going to actually feel more comfortable to hold on to HVU. I think one key questions you need to ask yourself is, how long am I willing to tolerate HVU? Are you going to tolerate HVU until it breaks 365, which corresponds to the bottom of July 10? Or are you going to get out if ever it breaks its former support of May, if it goes below 426? So from 479 to 426, there's a $4, there's not too much of a loss potential. And if you're actually betting that you're buying HVU and you're putting your stop loss at 424 for $1, well, you're not going to have too much of a loss potential on an ETF like HVU. Of course, it's a gamble. Can it be avoided? It should be avoided for those of you who want to wait for a clearer situation concerning the referendum, the results. But if you want to trade ahead of the results, I definitely think that HVU represents an alternative to do so, but make sure that you also put your stop loss on that position. So I've answered Z's questions. If you have any questions, folks, don't hesitate to ask us. We also have one comment here by the Prime Minister of Greece. He says that it will campaign for the no vote, no surprise there, and 19 countries of the Eurozone will campaign for the yes, so for Greece to stay and to remain within the Eurozone. And actually, if ever Greece gets out of the Eurozone, who's going to take care of Greece, right? Is it Russia with its problems? Would Russia really be willing to consider Greece as a potential partner? Because Russia was getting closer to Greece because they were within the Eurozone, so they could bargain with other European powers. Now, if they're out, well, Greece will be worthless for Russia. And really, they're playing a dangerous game so far right now. And of course, it's a mix of a lot of political calculations, but definitely it's the markets that will pay for that. And of course, the Greek people at the end of the day. Now, in terms of the news here, we have one news on Humana that acquired Humana. American markets are closed today. However, we're gonna have increase in the healthcare sector on Monday because of these acquisitions. Healthcare providers is a sector that we will publish a list on marketgurus.tv that you can have access for free for 10 days if ever we see an increase in the volatility on that sector after this announcement. Pacific Rubiales, they had to delay the vote because shareholders, the two buyers of this company, Alpha, SAB, and Arbor Energy, have asked Pacific Rubiales to delay the vote because we know that there's a Venezuelan investors which doesn't want this company to be acquired by Alpha, SAB from Mexico, and Arbor Energy. And this is why the company delayed the vote to gather more support for this acquisition to go through. We know RBC said to their investors, look, get rid of this company because there's a risk that the deal might not go through. Lightstream, they announced that they reduced their debt, but still the company continues to maintain its bearish cycle. And that brings me, because it's an energy stock, that brings me to questions from Adam. Is it a good time to short energy stocks? Well, Adam, take a look at the energy sector. Look, if ever the Greek vote to actually say, no, we don't want to stay in the Eurozone, as I said, we might expect an increase in the US dollar as a rush to safety. Now, what is this going to have as an impact? It's going to have a clear bearish momentum on the oil because they're negatively correlated. When US dollar goes up, oil goes down because it's costs more, it's more expensive to buy oil. Now, energy stocks could actually start to break down to follow the movement of oil. But just by looking at the technical situation right now, look at this. On a yearly basis, we're reaching an important support on the energy sector. We are totally oversold on the stochastics on a yearly basis and also on a daily basis as well. We're totally oversold. So should you open some short positions right now, I think the risk of a rebound remains too present on the energy sector. And this is why, for those reasons, what I think is that you should not short the energy sector, but rather wait for a clearer confirmation of a clear breakdown. So we need this sector to stabilize for a while, at least go below 200 points, 202 points to confirm a breakdown. As the new short opportunity, there could be Kelt Exploration as a new short. That stock was recommended on MarketGurus.tv as an analyst choice on June 8th. We still kept that position. It could start another breakdown below 821. Another of your pick as a short, if ever the energy sector confirms a bearish cycle, is Berkliff Energy below 679, Raging River Exploration below 840, or stock like Secure Energy Services below 1240. Or one alternative is always a bearish ETF such as HED, but we see HED right now is totally neutral. So you could only get in if the energy sector starts a bearish cycle and if HED goes above 1650. Now, Sam has a question: is there a time when market volatility ends and it becomes a time to buy again? Well, Sam, there's no clear-cut rule concerning when market volatility ends. Usually on MarketGurus.tv, what we have found is that around 2 o'clock, 2:30, 3 o'clock, usually they tend to be less buyers on the market, depending if there's no FOMC announcement, if there's no magic news that pops out concerning Europe or another country. And this is why around those hours, 2:30, 3 o'clock, this is where we feel more comfortable to pick among the list of the breakouts that we have shown on MarketGurus.tv, pick up the best out of all markets to choose our analyst choice portfolio. Because usually in the afternoon, when there's less time before the markets close, usually investors start to calm down, and we can actually rely more on the breakouts or the shorting signals that we have on the markets. So it's not a clear-cut rule, but usually in the afternoon, this is where we tend to have markets that are becoming more calm, and this is where our MarketGurus.tv, this is the time when we actually try to choose our analyst choice picks to put in our analyst choice portfolio.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above.
So welcome back. We have one interesting comment from Bear here. Such arrogance and contempt from the UE, whether yes or no, you cannot get blood from a stone. Since when do we condone slavery? Well, there are many people who are to blame for the Greek situation. First of all, the private equity firms and the banks that actually put the books of the balance sheets of Greece and presented to the European Union for Greece to be accepted in the Union. We know that a lot of those details were too optimistic and not realistic concerning the situation in Greece. The other thing is that when we had the problem in Greece, the first problem was initiated, Greece had to do some reforms, but the reforms were so slow. Public companies that were supposed to be privatized, pension reforms that were supposed to be done were not done, and it's actually really recently that Greece's economy started to have a slight increase. And when the leftist government came in, Well, all those gains have eroded because investors are scared, and right now nobody wants to pull their money in Greece, right? So it's really a complicated situation. We cannot blame one or the other. I can understand the Greek situation because, of course, you know, who wants to touch the retirees? 5 years they have been in recession. It's frustrating, right? Because it doesn't work to actually have austerity policy. It's not popular. Now, for the Eurozone, you also have to take into account that there's some rules that need to be met if you want to be a member. It's a privilege to be a member of the Eurozone. It's the biggest market in the world, 600 million people. And if we want to actually want all the rules to work for everybody, well, everybody needs to respect the rules. Make sure you balance your budget. Make sure that you actually keep a certain level of debt to GDP ratio. Make sure that you have some reforms to your pensions. So those are some rules that they need to respect in order for the Eurozone to thrive. And we cannot do one exception for Greece. And what's going to happen for other countries, such as Cyprus, such as Portugal, if ever they have some problems? Are they going to receive the same treatment from Greece? So it's really actually a complicated situation where I think we cannot really put a blame on one or the other. That's my personal opinion on that. Now, Jake here, he has a question. The financial sector has a pullback. Where is the support? Well, the financial sector, we can say that it is at a potential support. Why? Because it's testing the low of a downward corridor. We have rebounded and stabilized. So that confirms that at this point, 245, that investors are reluctant to let our banks go further down. Also, we can consider this as a support there because there's a upward trend that is there that is testing this point. Right now, we have a slight wave of buyers that's coming in at 245 on the financial sector. So 245 seems to be a support. However, if there's not a panic and we have another sell-off on the market, I think the other support now becomes 240.50 on the financial sector. So those are the two support I see. 245 so far seems to be the more solid one. And if ever there's another decline in the market, 242.50 represents the other support because it has been tested multiple times and we rebounded on it. Now, can the financial sector pullback continues? It could, but the wave of buyers is not significant enough, and I doubt that investors will continue to buy some banks, especially with the worries that is happening in Greece, even if our Canadian banks are not that exposed to the Greek situation. Now, Z, you have an interesting comment there. I don't know if you can put it online. The danger is that HVU could open on Monday with already a big gap down, rendering a stop loss useless. Yes, that's something that could happen. So if, in order to not do that, what you could do, you could stay on the markets on Monday and actually watch how HVU performs. You can use Trader Plus. Trader Plus, you actually can have the data live so you can see, or you can be a little bit more patient if ever there's a big gap on the downside or on the upside for HVU. So Trader Plus could be a tool that you could use in order to avoid that. At least you could set up some alarms, and if ever you see the stock, the ETF go down, go down, go down, you could say, okay, maybe there's a trend that's more sustainable there, so might as well sell it if HVU goes down. And if you see that the stock surge at opening, there's an alarm that will pop, and if ever you see the HVU continues to go up, well, then that will confirm that there's a strength on the wave of buyers. So this is the tool that we actually use in order for us to not be quick too much and closing our positions, because we do use Trader Plus for our analyst shares portfolio to give us the timing when we should sell or close a position. Now, as a new beginner in trading with a budget of $1,000 per trade, would you recommend to stick in stocks of about $2 or less? Thanks. No, no, Martin. I don't think you should limit yourself to stocks of $2 or less. With a limited budget, I think the key thing is, first of all, to have a bunch of this budget allocated to companies, I would say, that are more stable companies, for instance, in the financial sector, a consumer staple sector, some American companies in the Dow Jones, for instance, right? I know a lot of them are really expensive, but you can actually get some of them that are actually really good at a cheaper price, right? And with another portion of the budget, I think you can allocate it to more speculative stocks like $2 or more. Because if you actually only allocate your portfolio, your smart portfolio, to small cap stocks, yes, you can make a lot of money, but those small cap stocks, there are two risks. First, they're illiquid, so you might not sell the positions when it's losing a 15 or 16%. Second thing is that those stocks here, they tend to have a short-term outperformance and sometimes go down suddenly. So you risk losing a lot of money there. And this is why I think it's important to, when you have a small portfolio, to be strategic, allocate some portion in some big caps on the TSX or on the American markets, or you could buy an ETF that track, for instance, an index that you like, a financial sector in the US or the consumer discretionary sector on the US. This is an alternative, and put some portion in more speculative stocks of $2 or more. Now, as for the day trade of the day, we found HND. And HND here, why? Because natural gas went down. It gave 2 entry points. It's not as liquid. It's only taking 3.63%. But we believe that if natural gas continues to go down, HND will pay off. So it could be an opportunity that could also be more interesting on Monday if ever natural gas continues to go down. And Z, I hope your dark shirt, it's not a reflection of economic times to come. No, not at all. I didn't even think about it when I put my dark shirt today. Funny, Z, you're funny. Now, folks, I wish you all a good weekend. See you on Monday. All eyes are on the Greek referendum, but for today, I think it's better to stay on the sideline for swing trading. See you on Monday on the Swing Trading Show on DecisionPlus.com.